Good day, everyone. Our group is about to present the last three topics of our treasury management, namely the payment transaction, the international treasury, and the risk and control in treasury operations. But before we start, let me introduce first our group members. And here they are: Mr. Esteven Braga, Mr. Mark Ivan de Truz, Miss Jeniffer Lacson, and yours truly, Miss Hersey Martinez. And now, for the first part of our presentation, here's Mr. Mark Ivan de Truz and Mr. Esteven Braga.
The payment transaction means an act initiated by the payer or on its behalf or by the payee of placing, transferring, or withdrawing funds irrespective of any underlying obligation between the payer and the payee. Examples of payment transaction are cash, checks, debit cards, credit cards, mobile payments, and electronic bank transfer. In situation like you are using your credit card to pay what you buy at the supermarket. Now, under payment transaction, internal and external payment transactions, online and wired remittances, payment system, modern payment and transaction, PhilPass or Philippine Payment and Settlement System, RTGS or Real-Time Gross Settlement System. First, we are going to talk about internal transaction, a business transaction which is not undertaken with any external third party. A good example of an internal transaction is the use of supplies. For example, the shipping department keeps basic supplies like packaging tape, papers, and boxes on hand to ship products. These are regular supplies that are expenses on the income statement. Second is the external transaction. An external transaction is an exchange of value between two entities that changes the accounting equation. In other words, an external transaction takes place between two entities or companies in which an account is changed. External transaction must take place between two separate entities. The most simplistic example of an external transaction is the purchase of equipment. Assume Jennifer's manufacturing plant is expanding and he needs another CNC machine. Steven's CNC Center, LLC, is company down the road from Jennifer that builds machine. Jennifer purchases a new machine from Steven and records the purchase by debiting his fixed asset account and crediting the cash account. Steven does the opposite. He debits the receipt of cash and credits his revenues account for the sale. Now let's move on to the third one, online remittance. The old-fashioned concept of writing of money converges with the modern technology of electronic fund transfer. It can be done via any computer with internet access. This is why it is also known as internet money transfer. Example, a smartphone-based digital wallet that allows person-to-person money transfer is just one hugely successful. One of the smartphone-based digital wallet is the GCash. We can use it to transfer money easily via our smartphone. The number 4 is wire remittance. It is an electronic way to transfer money. It is also known as bank transfer. It happens in bank to another bank transfer. Example, individual has to send money immediately because of an emergency. Mark has a sister who lives abroad and needs money to pay for an expected house renovation. Mark can get his sister's account number and transfer money from his own bank account into his sister's account. To continue the presentation, Braga will proceed.
Let's move on to the number 5, which is the payment system. The payment system, it refers to arrangement which allows consumers, businesses, and other organizations to transfer funds usually held in an account at a financial institution to one another. Example of these are institutions, instrument, people, rules, procedures, standards, and technologies that makes it exchange possible. The number six is the modern payment of transaction. It's use cash substitutes compared to traditional payments. The example of this was prepaid cards, and the other one is prepaid cards for a player to use on in-game transaction. Next is the PhilPass or Philippine Payment and Settlement System, a real-time gross settlement or RTGS system owned and operated by the Bangko Sentral ng Pilipinas that processes and settles interbank high-value payment transactions of banks through the demand deposit account of the bank maintained with the BSP. Example of this is the payment is initiated by a paying bank to the transmission of an electronic instruction to transfer funds from their respective demand deposit account or DDA to the DDA of the paying bank. Lastly is the RTGS or real-time gross settlement system. The real-time gross settlement system is the fund transfer system where transfer of money or securities takes place from one bank to another on a real-time and gross basis. Example is the sender bank XYZ balance will be reduced by $10 million, while recipient institution bank PC balance will increase by $10 million. And now, let's proceed to the next part, and please welcome Miss Jeniffer Lacson.
Now, we are about to enter the part 2 of our presentation. First, here is the topic, the International Treasury, the largest gathering for the world's most senior treasurers with more than 4,500 registrants from 110 countries as of September 2021. Its first subtopic is payments and remittance processing. When it comes to payment processing, the word remittance is primarily described as a mail in payment towards goods purchased or services rendered. A remittance processing system is an automated system that handles and processes your mail in remittances or payments. Examples are checks, stubs, lease payments. Second is the remittance process. It is a major source of cash inflow for any country. The process is simple, wherein expats save a portion of their salaries and send it to their families living in their home country. Remittance happens via a legal channel. Examples are mail, bank transfer, money order, or an authorized money transfer operator. Next is how correspondent banks works. It works through an agreement between a foreign and domestic bank where a correspondent account, usually referred to as a vostro or nostro account, it is established at one bank for the other. Correspondent banking typically involves the two banks establishing reciprocal accounts with each other. Example is a corporate customer of a bank in one country wants to pay for products purchased from a foreign supplier. The customer approaches its domestic bank and instructs to make the payment in foreign currency. Last is the international investments. One of the investment strategies in which an investor diversifies his portfolio by purchasing various financial instruments, investing or acquire ownership or collaboration in different companies across the globe in order to maximize the return and to reduce their exposure to various investment risks. The example of this is Ford opening up a new factory in India to your friend opening up a Subway restaurant in Canada or Mexico. And here comes the last part. The risks and control in Treasury Operations will explained by Ms. Hersey Martinez.
Thank you. And for the last part, which is the risk and control in Treasury Operations. First is the cash compliance report. It is the anti-money laundering law, wherein this act aims to protect and preserve the integrity and confidentiality of bank accounts. Compliance report covered suspicious transactions as counter for any money laundering or terrorism financing. Second is risk management. It is the process of identifying, assessing, and controlling threats to an organization's capital and earnings. Examples are risk avoidance, customer credit risk management, industry-specific strategy, elimination of contract risk, compliance risk, safety risk, information security risk, and market risk. Third is internal control. It is the mechanisms, rules, and procedures implemented by a company to ensure the integrity of financial and accounting information, promote accountability, and prevent fraud. Example, a system of business forms to track all company transactions. Create an audit trail to track sales, credits, refunds, or returns of merchandise. The movement of inventory, purchasing and ordering from vendors, and receipt of cash and payments. Fourth is the bank reconciliation. It is the process of matching the balance in an entity's accounting records for a cash account to the corresponding information on a bank statement. And here's an example. ADSLYM Lump Incorporation has a difference in the balance as per cash book and bank statement as on 31st of March 2017. And you are advised to prepare a bank reconciliation statement as on that date with the following information. Number 1, balance as per statement as on 31st of March 2017 is $4,000. Balance as per cash book is $1,400. Number 2, check of $1,000 and $500 issued as on 30th of March 2017 but not yet cleared. Number 3, an insurance premium paid by bank $200. It is not yet recorded in cash book. Number 4, an outgoing check of $2,000 recorded twice in the cash book. It is properly recorded in the bank statement. Number 5, payment of a check of $400 recorded twice in past book. Number 6, dividends received $500 recorded only in the bank statement and not in cash book. Number 7, check of $700 deposited on 29th of March 2017, but it is not yet collected. Number 8, bank charges of $100 debited only in bank passbook. And here's the solution. The balance as per passbook amounting of $4,000. Add insurance premium paid by bank amounting $200. Check recorded twice in passbook amounting $400. Check deposited but not yet collected amounting $700. And bank charges debited only in passbook amounting $100 for a total of $1,400. And now let's list checks issued but not presented for payment amounting $1,000 plus $500 is equal to $1,500. Check recorded twice in cash book amounting to $2,000. Dividends received recorded only in bank statement amounting $500 for a total of $4,000. And the balance as per passbook amounting $4,000 plus the $4,000 is remaining $1,400. And it is the balance as per cash book. And now, let us go on in the last subtopic, which is the system and audits. A system or process audit is an evaluation of the sequential steps and techniques of the process within the system. Auditing of a system or system processes provides value for the management by the evaluation of the processes, their control, risks, and the achievement of the objectives. Examples are internal audit, external audit, IRS, and financial audit. And this is the end of our presentation. Thank you so much for the time you rendered to listening in our group presentation. We would also like to thank our subject instructor, Ms. Perla Rebancos, for the whole semester that she teach and guide us. Thank you so much, ma'am, and may our Lord bless you and your family. Thank you so much, and God bless.